I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different than everything else out there. I bring together a new and an experienced investor on each episode, and I let the aspiring investor ask the questions that they need answered. So if you're an aspiring investor yourself, you probably will have the exact same questions. Now, before we get to this episode, make sure you hit the subscribe button below and that little bell to make sure you get notified every time we post a new episode. And now, enjoy the show. Adrian, we got Jens here on the line. What do you want to ask him?
What are some of the maybe more successful ways in regards to, attracting accredited investors and raising capital?
It always starts with one-on-one connection with people. Look at your list of people you know and start having conversations with them. Of course, it's great to have accredited investors. So think about who is in your network that may meet that, and then just meet with them and put them on your list. And then also ask for referrals and say, it seems like you want to invest in my next deal. Is there anybody that you can refer me to? And it's amazing, right? I don't have a lot of investors on my list, but I have a lot of repeat investors.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. We've got a repeat experienced investor guest. We haven't had that happen very often. We got Jens Nielsen with us, and we got Adrian Chukliangi with us as well today. So Jens, first of all, welcome to the show.
Thanks, Brian. I'm excited to be back and talking to you and your guest again.
And for the listeners, if you want to go back and listen to his previous episode, it was episode number 102. And we paired him up with a guy named Alex, and Alex has been on fire since. That said, Jens, tell us a little bit about yourself.
Thanks. And so as people may hear, I have a little bit of an accent, and my name is not the traditional name you would see here in the US. I was actually born and raised in Denmark. Moved to London, England in 1993, and then onto the US in 1996. I've been here coming up on 26 years now. So half my life. Had a long career in IT. Started out on the East Coast, lived in Maryland for 10 years, and have slowly been moving west. Been living in New Mexico, southwestern Colorado, and now I'm back in New Mexico. I live in Santa Fe. So I had a 25-year IT career, but about 6 years ago, I decided that I didn't want to do this for the rest of my life. I didn't want to be in IT. It was a good, comfortable career, but I realized that I wanted to do something more. There was more to, I had more capability. I had, something more in me that I hadn't been able to fully express. So I decided that real estate investing was the path I wanted to take, and, started out, about 6 years ago with some smaller multifamily in Albuquerque, New Mexico, a couple of fourplexes. That was the start. I never did any single family, but fourplexes, and then slowly went into some, commercial, 11, 38 unit, and then started, down the syndication route about a little over about 3.5 years ago. Did my first syndications, or even gone full cycle on a couple of those. And was fortunate enough to be able to leave my job about 13 months ago. So I'm a full-time syndicator, and I'm also a high-performance coach. So that's my other business, is coaching people on kind of high-performance mindset, life coaching, and so forth. So very quick, a little bit about me.
Yeah. Well, what I like to focus on a lot is the transition period. So you were in IT and decided that you wanted to pursue real estate. What were some of the biggest driving factors to that?
There's a couple of things. And actually, really, really deep down, and I've been thinking a lot about this. So I'm 50, turned 51 in July, and my mother, she passed away before she turned 51. She was around my age when she passed away from cancer. And I was like, as I was getting older, it was really hitting me that we don't have infinite amount of time in this world, right? And we think we do when we're young. It's like, the runway is really long. But at some point, the reality may hit you. And I realized I didn't want to feel that I hadn't fully, lived, fully loved, fully expressed what my capabilities were before it was too late. So that was really one of the burning things in me. And it's becoming even more front of mind right now as I'm growing older and so forth.
Yeah. Yeah, absolutely. I think I heard somebody say once, and I really agree with this, that, on your deathbed, a lot of people look back more at the missed opportunities and regretting not taking, a leap of faith like that. I mean, I don't think anybody's going to look back at a long career in IT and say, man, I'm sure glad I went to work every day for 45 years. Right. I don't know. I wouldn't by the way, but so we're getting into multifamily. I know you said you have some smaller multifamily and then syndication. How did that path look for you? Was it small multifamily first, then syndications, or go ahead and tell us how your portfolio grew.
It was, so me and my wife, we bought, a couple of fourplexes and then an 11 unit, kind of in the first 6 months of investing, that's back when property prices were a little lower than they are now.
Yeah.
And, and I started to really get excited about it. And I knew I wanted to bring investors in because I knew, there's a limitation to how far I could go by myself. I wasn't ready to syndicate, but I had my broker, who was also a big investor in Albuquerque, I said, hey, if we find something, that's a little bit bigger than I can take down, do you want to partner? And I'll bring some of my friends in and we'll do a joint venture. And she's like, yeah, sure. So that was kind of like the fourth deal we did. That's just probably the fifth one, but kind of first one we brought some partners in was that 38 unit deal. We basically five of us came together in a joint venture and we bought, and I realized, okay, there are a lot of people out there that want to invest in real estate and they don't know how to do it themselves. They don't have time. They can't put it together. And that's where we meet that need, doing syndications, giving an opportunity to invest in real estate without doing all the work. And I was like, man, there's a light bulb went off there.
Yeah. So that was your gateway deal right there. The other people, oh my goodness, we can raise other money from other people, do bigger deals, and help a lot of people invest. I like that.
Yeah,
I like that. So, let's do this. Let's talk about. Can you do a little bit of a deep dive? And I mean, you can't do a whole big of a deep dive in 5 to 10 minutes, but talk us a little specifically about one of the deals you've done. Pick your first, favorite, most recent, and give us an idea of your deals.
I think I'd like to maybe talk about some of the more recent deals we've done, because we have been focusing on the Cleveland, Ohio market, because I have a partner up there and we have, boots on the ground. We have over 500 units that we have purchased there, but we've very uniquely, a lot of people, they want to buy, that cookie cutter, 200 unit garden style apartment, which is great. It also means everybody wants to buy them and the prices are really high. So we focused on more of a portfolio approach where we are taking, the portfolio, maybe it's 10 buildings that have, anywhere from 10 to 20 to 30 units, but buying them as a portfolio. So the most interesting one there, I think, is the deal we did in September 2021. It was 187 units in 10 properties, all in and around, 1 or 2 miles kind of diameter. It's a bit of a value. Well, it is a value add play, right? We went in there with bridge debt, and then we have about $2.5 million worth of capex to fix up these units, and it was. It was owned by longtime owners. They hadn't really been pushing rent, hadn't really been updating it. So rents were in that $600-700 range. Some of those units that we have been renovating are now $1,200 to $1,400. So we're literally doubling the rent.
Wow.
Yeah. And we're also experiencing what it means to own properties that are built in the turn of the 20th century. So these are from 1920s, 1930s, 1940s. So a lot of surprises when you start lifting up the floor planks.
Yes.
Like
yeah. We got 2 properties. One was a 30s build. One was a 40s build. At least that's what public record says. Our property manager claims to have a picture from the 1920s with that building up, so it could be older. Property record says, I think 35 or 36, but, a lot of interesting things on those older properties. Now, I just want to go back. So you said a portfolio of 10 properties with 180 units. So average one is 18 units. How close are those together? And what are the challenges you guys have had from a bunch of smaller properties versus one larger property?
Yeah, I mean, so it's anywhere from 5 units, I think the smallest one, to 30 some units in the larger one, and they're all within about a mile, maybe two of each other. So they're close together in what's called the Cleveland Heights area of Cleveland. So they're relatively close by, right? So on the challenge and the surprises we've had, right, as I mentioned, you start pulling up floorboards or tearing out old toilets, and God knows what you find behind there, right? So the challenges we've had with its surprises, and then of course, like everybody else, supply chain issues, labor problems, inflation. So I mean, our cost is going up, which probably means we have to scale back, and maybe we can't do all the units, so we have to scale back some of that work. On the flip side of that is that we are seeing higher rents than our projected rents were, right? Maybe $100 or $200 based upon underwriting. So that side of it is also really exciting. And, we're really turning around that market to some degree, because there were a lot of old owners that were just slumlords, if you will. And we bought a lot of those owners out, meaning that we're starting to change that market. It's becoming nicer.
Yeah.
Rents are going up and everything else. There's a higher quality that we're putting up.
Yeah, yeah. And you said something interesting. I tend to very much agree with you. You say a lot of people want that cookie cutter. I think you said 200 plus unit, and it does drive prices up in that field. I think there are a lot of opportunities in the smaller apartments, because a lot of the bigger groups don't want them, and a lot of the smaller groups, can't quite access, the 20 to 50 range. I think I've always looked at that as kind of a dead space for apartment investing, because your single owner operator can't reach that high, and your groups with any sort of experience don't want to go that low. So tends to be an opportunity space, especially for the newer investors.
Yeah. And, we're adding, so, we have 20 buildings now, because this is the third time we bought it, and we're getting on a contract for another 8. So before we know it, we will have, over 400 units in and around that same neighborhood. So suddenly there's scale there, right?
So one of my favorite questions to ask is about motivation, and I like to ask about your why. So Jens, what is your big burning why?
Well, the first one, I think, when I mentioned how my mother passed, around the age I'm at, that was probably the original one. The other thing was, really being able to reconnect with my family back home, and just getting the opportunity to live life more fully and more, just be more present and aware and connecting there. So a big thing was being able to, go back and visit. And I just actually came back earlier this week from a month overseas. So, after a few years of working on this, I finally have had the opportunity to take a month off, right, and go travel and so forth, right?
Yeah.
So there's really that. So those are kind of my personal whys, or that's more intrinsically motivating myself. But also, the bigger why is a lot about giving back, as a lot of people say. What does that mean to me? Well, it really means like coaching people and helping bring the next generation of investors up, right? Because I had a lot of mentors and help. And if I can do that, we even put out an event earlier this year in Denver to kind of help those, mastermind for maybe newer investors and so forth. So that's the second part of it. I will say the personal stuff came first. And now as all those goals have been met, then that deeper why is then starting to evolve and come to the surface. Yeah.
And I think a lot of people's first why, once you kind of meet it, my first why was to start spending more time with my kids, to not miss the birthdays, not miss the Christmases, right? And so my first why was, get me out of my W-2 so I have more control. And once I got done with that, I think exactly what you said. You got to look for something deeper. What's deep down. I think it's the same for most people in your shoes. They've already gotten out of their W-2. They've already had a certain amount of success. And then it's just like, okay, so what's my deeper why? What's the next level why for me? I very much appreciate you sharing that, Jens. Now, last question for you before we bring on Adrian, and that's what's next for you.
Yeah, so we continue to do deals. So that's kind of on autopilot to some degree right now. Not that it's easy, but it's kind of going really building that event that I mentioned. So it's called the Pay It Forward Mastermind. We had one in March, and we're going to have another one in October in Denver, building that to the next level, because that was so fun and so exciting to put on the first one. So we're going to build that and grow that. So that's really important to me.
Yeah.
And doing that. And I think also, the continue to network and work with people that want to come up in this space and so forth. So those are kind of the next things that are on my radar for sure.
Awesome. Appreciate you sharing all of that. All right. We're going to switch gears and we're going to bring on Adrian. So Adrian Chuklyangi, welcome to the show.
Thanks, Brian. It's an honor to be here. I appreciate you having me on.
Yeah, no problem. Do us a favor. Tell us a little bit about yourself.
Grew up in Virginia and ended up going to the Coast Guard Academy for my undergrad, and currently in the Coast Guard as Coast Guard officer. Ended up, getting married, and my wife and I now have 2 boys under 2. So we're enjoying the stage of parenting with some babies, and it's been a lot of fun. Through the journey in the Coast Guard, kind of stumbled upon real estate, and ended up getting involved with active duty passive income, kind of went down their education, and, heard about multifamily and commercial real estate, and was just mind blown that I hadn't heard about it before. And, soon after that, invested as a limited partner, and have really been, working on growing the skill of raising capital to kind of add value in the space. So.
Yeah, it's a good skill to have. I say very frequently, I mean, there's 2 real currencies in this market. It's finding the deals and finding the money, and if you're really good at one or the other, you're going to do very well in this business. So, that said, what's your big burning why?
Yeah, I definitely resonate with, the both of your whys. I think, wanting to have that time freedom and that control over that time to, be present as a dad. And, my wife and I would love to homeschool our kids together. So I'd love to, max that time out to be able to do that on a high level. But I think too, my wife and I have kind of connected our why and the vision of giving back to just helping missionaries who are committed to sharing that joy of the gospel with high school and college kids. The students definitely have a special place in our heart, and we've kind of received that when we were going through our time at that age. And so we just would love to be able to kind of serve those missionaries who are doing the same thing. So
help other people who've helped you, right?
So definitely.
or actually more of the, help the people that have gone through the same type of things you've gone through. I mean, I see that a lot. A lot of people, when they look at their bigger whys, they seem to, and this is going to be episode like 280. So I've talked to a lot of people about whys, but one thing that I've noticed is, a lot of people's why, when they look for that next level, they look back on their lives, and it's either somebody that's really helped them, or someone else they've been able to help, a big life experience like that really drives us to give back in a certain way. But, I appreciate you sharing that as well. Adrian, we got Jens here on the line. What do you want to ask him?
Yeah. And so I know, you've been involved with several syndications, and a part of that, I think, is, in that role of raising capital, which you've excelled at. So I'm just curious, what are some of the maybe more successful ways that you've found in regards to, attracting accredited investors and raising capital?
I always tell anybody that asks questions around capital raising that it always starts with one-on-one connection with people. So if you're starting up in this space, look at your list of people and start having conversations with them one-on-one. Like, is that Zoom call? Is it coffee? Is it lunch? Or something like that? But start develop them kind of one-on-one, because you're going to get a lot of really good questions from them. You're going to learn what people want to know, and some people are very logical. They want to know what the financials are. Other than more emotional, it's like, oh yeah, this sounds good from an emotional stance. So figure out what kind of questions they have and what fears and concerns they may have. Try to understand that. So I spent a lot of time early on doing all that stuff. Of course, yeah, it's great to have accredited investors. So how do you attract them? Well, maybe you look at maybe you make an assumption and say, well, here's somebody who they're older, they've been in a higher paying job, or, they probably has some wherewithal when it comes to finances, so you try to attract them. It's not your 20-year-old kid that's just out of college. They're probably not going to be that person, right? So no offense there, but so think about who is in your network that may meet that, and then just meet with them and put them on your list. And then also ask for referrals and say, hey, it seemed like if you want to invest in my next deal, is there anybody that you can refer me to? And it's amazing, right? I don't have a lot of investors on my list, but I have a lot of repeat investors. And once you can create those, they will keep coming back to you. So you don't have to have 100 people invest with you. You just need to have, 20 or 30 that comes back to you over and over.
Yeah. And I think that's a smart way. That the more people you talk to, the more you start understand the motivators, the things that trigger people, so you start talking to people, you're going to hear what they want from their investments. You're going to hear what their pain points are. And a lot of people call discussions like that market research. You're looking at your target avatar and you're figuring out, okay, I've talked with 20 people. Here are the common themes and the common trends. And then you turn that around and you use that as your method for attracting more people. So if you're big on social media, that's the stuff you post about, so try to kind of reverse engineer your finding investors from the calls you have with the actual investors.
Yeah, I think another question I have too is kind of along the same lines for someone like me starting out and kind of focusing on that role. I feel like there's a few ways like that some syndicators mention, whether it's, starting a thought leadership platform or, creating a website or, creating your entity or, getting on social media or, starting those one-on-one conversations or maybe a meetup. Do you see any specific way that maybe someone just starting out should focus on more than the other? I don't know.
Yeah, no, okay. That makes more sense. Yeah. All of them, but
all the above.
but I mean, personal experience, and Brian has probably a totally different experience. It started out by the one-on-ones that I mentioned in the previous question. Then I actually did start a meetup when I was living in a small town in Durango that led to several investors. I did, of course, create my website, put an ebook on there that created some interest, really getting on podcasts like you are today, getting your name out there on podcasts and sharing, because somebody's going to be connected to you because of your authenticity, your mission, your why, and all that stuff. And that's one way to connect with investors. Always give them an offer. I always offered people, I still do, hey, if you want to get on a call for 20 minutes with me, anybody can book a call on my calendar link. Thought leadership platform. I mean, I would definitely do a newsletter. You should be present on social media. It has to be very consistent, and you have to have a message that you put out there for people to get attracted, because that takes a long time to build that up.
It does.
I would put stuff out there. During COVID, I ran a handful of webinars, which was interesting for people to join on, right? So figure out what you're attracted to, but make it consistent and make a commitment to doing it for a long run, because it takes time.
So you mentioned a lot of things in there, but I would say all of them are important and all of them are good things to do, but you don't have to get them all done up front, right? I mean, pick one area that you're semi-competent in, get good at it, and figure out how to put it on autopilot, and then work on the next one. I right now I have a weekly meetup, I have a monthly meetup, I have a podcast, I have a LinkedIn presence, and I have a couple of websites actually. So I'm doing a lot of the things that you mentioned. But if you were to rewind, 4 years ago, it all started with a couple of Facebook posts. And it was actually ADPI was where I started posting on Facebook, just inside that group. And I started getting good at figuring out what types of social media posts that resonated with other people. And I grew from there, so it was I got that part done. I got it down. I got it to the point to where I don't spend a lot of time on that anymore. I still post 5 to 8 times a week, but I don't spend a whole lot of time on it. And then I start growing something else, another aspect of the business, So when I started the meetup, I was 100% focused on the meetup, and it takes time to grow into everything is the answer. So they're all important. And, 2 to 3 years from now, if you're going to stay in this business, you probably should be doing a little bit of everything, but just start with one, get good at it, and then add on to it. So let's reverse it. Let's see if we can ask you questions about what you're doing. So, where are you currently looking for investors?
Yeah. So thank you. We just launched our podcast last month, or 2 months ago now. So that's been a lot of fun to put that together, and we're sharing that on LinkedIn, and that's kind of our main focus with those two things is kind of combining the podcast and then LinkedIn, and just building that battle rhythm of being consistent, and then just doing those conversations that Jens was talking about, and just getting to know people and asking them what their goals in life are, what their dreams are, what they're working on right now, what their family's like, and just kind of inviting them into what we're doing, and just sharing life like that. So
yeah, I think podcast is definitely a way to reach a lot of people at once. And from personal experience, I'll tell you, it takes a lot of time to grow it. So, keep on pushing. Let's see, Jens, you got anything to ask him before we?
Maybe I just want to kind of add something to the other question you had around, how do we attract investors and accredited investors? And a lot of people think, I can do a 506C, I can advertise and all that stuff. But in reality, my experience has been most people still need to know you. They need to get to know who Adrian is. Yeah. That's through your podcast, through your posts and other things. You can't just say, hey, I got an amazing deal, and people are going to stream to you. So just that, it's really feel like that you have to be authentically showing up as who you are and get people need to get to know you. So that was just one thing I wanted to add there.
Yeah. And that is true. I think a lot of people mistakenly think that if you have a good deal, the money will come, and to a certain extent, it's true. If you have a good deal, it's easier to raise capital, but you also have to be a known quantity, So I think Jens hit the nail on the head, whether you're doing a 506B or a 506C, people in the syndication space or LPs in the syndication space want to invest with people that they know. So even if you are doing a 506C, just like Jens said, I'm really going to say the exact same thing he just said. You still need to try to build that personal relationship with people, and then try to get onto, bigger and bigger stages, and not literal stages, but, be able to, get your message in front of more and more people.
Yeah. I actually do have another question for Adrian. So, raising capital is a wonderful avenue to go down. But what other skills do you have that can benefit your team beyond raising capital? What other skills do you have that can be of huge value to your team?
Yeah, I mean that's a great question. I think within this space, capital raising is that focus. But on the other than that, I feel like I can add value with marketing, investor relations, some of the asset management, and kind of overseeing, what's going on, within the property, dealing with, online, softwares or, different tool sets, behind the scenes. I think happy to add value in those areas. I guess that kind of answers your question a little bit.
What do you do for the? I was going to say, what do you do for the Coast Guard, and what was your degree in? What's related?
Yeah, so my degree was operations research in computer analysis. So kind of like the applied math side of the world. And then my first couple assignments in the Coast Guard, I was involved in law enforcement missions with drug interdiction and migrant interdiction, but also recently just kind of transitioned into the IT program management side of the world. So kind of drinking from the fire hose on that side of things, but kind of a diverse array of different assignments and experiences.
Yeah. One thing I would suggest is figure out how to translate those assignments and successes into real estate terms. When I started out, I had, 17, 18 years of military experience. And the way I tried to spin it is bringing 20 years of leadership and management experience to the multifamily space. My last job, one of my jobs in the military was, I worked at a unit that shoots down enemy airplanes, right? There's not a lot of direct translation between shooting down airplanes and anything else outside of the military, right? So you have to be able to, spin that in a way that, you can build on your current credibility, So, you're in Coast Guard, you're going to be doing things, especially as a Coast Guard officer. There are things you do that translate to this, and you just got to be, I think one thing you'll have to do is be good at articulating that to other people. All right. Well, we are about out of time. So thank you both for coming on the show today. Very much appreciate your time today. And I got one last question for each of you. And that's, how can listeners learn more about you?
I'll take that. So my email is jens@opendoorscapital.com. And as I mentioned, if anybody wants to get on a call, they can go to opendoorscapital.com/call and schedule a 20-minute free call with me and I'd love to talk to anybody.
All right. Open Doors Capital. Make sure you get the S on doors, because there's a couple of open door groups around. So, Adrian, same question for you. How can listeners learn more about you?
Our website is St. Joseph's Capital. And we just put out a 7-day introduction to passive real estate investing.
Nice.
Course for anyone interested in learning more about passive investing. And so, stjosephscapital.com.
All right. So we'll have information about that in the show notes. So anybody who's interested in any of that, head down to the show notes and check it all out. And once again, thanks, gentlemen, and appreciate your time. Hey, if you like that episode, make sure you hit that subscribe button. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, yet, you are missing out. So get yourself 30 days free by clicking the link below in the description, or go to thetribeoftitans.info, and we'll see you there.